acquisitions. So number 3, recognizing and measuring non-controlling interest. So NCI of balance berhad and mas berhad should be recognized on the acquisitions of the date at the fair value of the share held by the non-controlling interest held by the non-controlling shareholder. So the step number 4, recognizing and measuring the goodwill. Both goodwill of balance berhad and mas berhad should be recognized in the CS of FP and tax for the Okay, so the goodwill balance berhad, the control is 60%. So the formula is cash considerations plus NCI and minus fair value net asset on date of acquisition. So we will find the goodwill. So cash considerations is 6 million plus NCI 40% times 1,200,000, we will get 2,080,000. So we will get 8,080,000. So fair value net, the total of fair value net asset on date of acquisitions is 1,200,000. So we get 2,880,000. So there are payments for the balance. So we minus 144. So the goodwill of the balance is 2,700,000 and the goodwill of the mas, the control is 70%. So the formula is same. So the cash consideration is 3,600,000 plus NCI 30% times 4,050,000. We will get 1,250,000. So the total is 4,850,000. So the fair value net asset on the date of acquisition for mas, ordinary share is 3 million. Pre-return profit, because of mas is date of acquisition is on July 2017, so we will divide by 2. So 1,500,000. ARR intangible asset 1 million, so we will get 4,1,500,000. So the goodwill is 765,000. So NCI for balance we will get from the goodwill that we calculate. NCI will be 2,080,000. 2% preference share because the Mercury acquires 16%. So we will apportion 16% times 1 million. We will get 600,000. So 3% renewable preference share. We will get 1,500,000. And for the general reserve, post general reserve Mercury, we just take from the information 4 million. Post general reserve balance, because they are return profit, they are pre-general reserve, so 500 minus 500. So they are bonus issue for the general reserve, so 400 plus 400. So the post general reserve for balance is 400. So we will apportion general reserve NCI 1,116,000 and 2,000,000 for retained profit balance. The controlling interest is 16%. So the total is 4,100,000. So we will apportion with 16% and 40%. 16% you will get 2,450,000. 40 million, 40% 1,640,000. So return profit mas, the control interest is 70%. So we calculate the total is 400 million. So we apportion with 70% and 30%. 70% 280,000. 30% 1,120,000. For the Mercury, return profit Mercury, the total is 6231. So the total of GRE to FOFP is 8,971. NCI 7,350,000. And group general reserve is 4,240,000. That's all for me. Thank you.
Assalamualaikum. profit inventory. And the total is we minus 19,200. So gross profit is 32,450. Next, the adjustment is gain on disposal 500 because 500 minus 500. So no amount. Previous dividend receivable 40. Operating expense we plus 300,000 300 because of under depreciation of plant and equipment, and minus 100 because of over depreciation of equipment. So we got the total 16,100. Okay, and next interest income 350 minus 100. 100 is we got from 10% from 1 million debenture. So the total is 250, and minus finance cost we minus 100 because of the interest expense. So the total is we minus 140. Okay, after that we will minus impairment of goodwill, which is cost 144. Amortization of intangible assets 200, and after that we can calculate profit before tax, which is 17,156. So the value will be minus with taxation 7,500, and the total of profit after tax is 9,656. Okay, so from the profit after tax we calculated before, profit after tax attributable to parent and NCI. Okay, so parent 7,728.4, NCI minus Akmar for minus 1,897.6, and Mars 30. Okay, so where we got this amount? Okay, so for Venus, we take profit for the year as in the question 5,000 minus under depreciation plant and equipment minus interest 800. Okay, so the total is 4,600. After that, we have to apportion 40%. So we got 1,840. After that, we plus with 144 times 40% plus 57.6. So the overall total is 1,897.6. Apart from that, we have another NCI, which is Mars. Okay, so profit for the year as in the question is 500, minus with amortization of intangible assets 200, and minus our realized profit inventory as we calculated before 200. So the total of 100 that we got will be apportioned to 30%. So that we equate the profit is 30. Okay, so for the next question is 1E, Sochi. Okay, so firstly we have to calculate the balance BD. So the amount we get from working tree. Okay, so this is working tree. For group return early, we just plus with as an integration. But for the NCI, we have to apportion at the group control interest. So we got 11,020. After that, NCI, we take the amount of both NCI and apportion with NCI control interest. So the addition will, the total addition is 630. So lastly, for group general reserve, 4,000 plus 500 minus 500, because this 500 is pre-general reserve. So therefore we got the amount 4,000. So this amount will include in balance BD is achieved. Okay, next profit for the year. Profit for the year is as we calculated in profit after tax attributable to parent and NCI as we calculated before. Okay, so since there is no ordinary dividend paid and previous dividend paid, so there is no amount. And for surplus or revaluation, there are surplus or revaluation amount 480. And lastly, bonus issue. We have to apportion bonus issue ratio between group general result and NCI. So we got 160 for NCI and 240 for group. And so we total it and balance CD that we got from. Okay, so lastly for balance CD for group retained earning we got 18,748.4, and for NCI 3,197.6, and lastly general result for group 4,240. So that's all from me. Thank you.
Assalamualaikum. I'm Nursyazwani Bt Mat Isa. So I will proceed the presentation for the question 1F, which consolidated statement of the financial position. Okay, for the non-current asset, plant, property and equipment, 20,400 plus 9,500 plus 4,500 plus 1,200 is from fair value of the plant and equipment minus 300 is under depreciations of the plant and equipment minus 2,500 which is from the trademark minus 500 is the unrealized profit for the equipment and plus 100 is under over depreciation for the equipment. So we got 32,400. Next is intangible asset. 1,000 minus 200 is for the amortization plus 2,400 is for the trademark. So we got 3,200. And for goodwill we got 3,501. For the current asset, first inventory, 8,000 plus 3,500 plus 500 minus 200. 200 is for the unrealized profit of inventory. Next, bills receivable, 25 minus 10, which 10 is for the bill discounted, so we got 15. For the preference dividend receivable is 40. For the account receivable, 8,300 plus 2,225 plus 1,000 minus 1,000, so we got 10,525. And for the bank, 2,000 plus 500 plus 500 plus 200, which 200 is for the cash in transit, so we got 3,300. For the equity, ordinary share is 10,000, general reserve 4,240, group retained profit 18,784.4, NCI 3,197.6, 2% of preference share 400, and 3% of the redeemable preference share, which 1,500. For the non-current liabilities consists of 7% of the bank loan, which 2,000, and 10% of the debenture, 1,000. The current liabilities, first bill payables, 25 minus 10, which 10 is the bill discounted, so we got 15. For the ordinary dividend payable, we got 325, which 200 plus 200 minus 120 plus 100 minus 105. Next is preference dividend payable is 100, and for the account payable, 11,565 plus 4,200 plus 700 minus 1,000, so we got 15,465. And for the interest on debenture payable, we got nil, is 100 minus 100.
For question 2, a joint arrangement is an economic arrangement where two or more parties have joint control. A. State the area covered by the contractual arrangement as specific under MFRS 11 joint arrangement. The answer is for the joint operation, the areas covered by the contractual arrangement is to the asset and obligation for the liability. However, for the joint venture is to the net asset of the arrangement. B. Describe joint control according to MFRS 11 joint arrangement and provide one scenario as an example of a joint control. Joint control is exists where the party contractually agree to share the control and decision about the relevant activity of the joint arrangement have the unanimous consent of all the parties sharing control. The scenario, Salma Berhad, Baedah Berhad and Rahmat Berhad are parties to arrangement where Salma Akmar Berhad have 50% voting power, with Beta Berhad and Rahmat Berhad each having 20% voting power. The contractual agreement between the three is that at least 30% of voting rights are required to make decisions about the relevant activities of the arrangement. In this case, all three have joint control as all three have to agree on all decisions. Rights to the asset. The party to the arrangement share all interest in the asset relating to the arrangement in a specific proportion. Next is obligation for the liability. The parties to the arrangement share all liability, obligation, costs and expenses in a specific proportion. Next is joint venture. Right to the asset. The asset brought into the arrangement or subsequently acquired by the joint arrangement are the arrangement's asset. The party have no interest in the asset of the arrangement. The obligation for the liability. The joint arrangement is liable for the debts and obligation of the arrangement. The parties are liable to the arrangement to extent of first their respective investment, and second their obligation to contribute and unpaid, third additional capital, and fourth both.
I'm Nursyazwani Bt Mat Isa, so I will proceed with the question number 3. For the 3A is the relationship between the Lily Berhad and Barry Berhad. So the answer is Lily Berhad's control interest in Barry Berhad is 75%. Therefore, Barry Berhad is a subsidiary to Lily Berhad. After the right issue, the total numbers of the issue will be 1,120,000. As the investor, Lily Berhad holds 600,000 shares out of 1,120,000 shares, so its interest has diluted from the 75% to 54%. So there is an increasing for the NCI, which from 25% to 46%. Question 3B, calculate for the goodwill. So first, consideration transfer is 1,800,000 plus with the NCI, which 25% times with the value of the net asset, which 1,600,000. So we get 400,000, and we add up consideration transferred plus NCI, so we got 2,200,000, and we minus with the fair value of the net asset on the execution, which 1,600,000. So we got goodwill 600,000. For the question 3C, calculate for the gain or loss on disposal. So first, immediate prior to the right issue, we got 3,750,000, which 5 million times 75%, and we minus with immediate after the right issue, which 5 million plus 320,000 share times 5 ringgit times 54%, so we got 3,564,000. So we got decrease in the share in the net asset, which 186,000, and we also minus with the proceed from the sales of right, which 50 cent times 320,000 share, so we got 160,000. So we got loss on disposal, which 26,000. For the question 3D, as a result of the private placement, the number of the issued share will be 1,250,000. With Lily Berhad only have 600,000 share only. So after the placement, Lily's interest dropped to 48%. And for the calculation, fair value of the 600,000 share in Barry Berhad times with 7 ringgit, so we got 4,200,000 minus with the proportionate share of the net asset before the placement, which 3,750,000 minus with the goodwill that we calculated before, which 600,000. So we got loss on this disposal to the profit or loss, which 15,000. Based on the amount of the share capital, Berry Berhad is no longer a subsidiary and should not be consolidated. It should be equity accounted and treated as an associate. Lily Berhad as a parent will consolidate the revenue and expense of the Berry Berhad up to the date of the deemed disposal, and subsequent to the date will equity account the performance of the investee. In the consolidated statement of the financial position, the increase will not be consolidated, but the investment in associate will be shown as a single item and equity accounted. That's all from me.
On October 2017, Aisyah Berhad acquired 40% of Adam Berhad ordinary shares of 2,750,000, and the return profit of Adam Berhad on that date was 200,000. On the same date, Aisyah Berhad also acquired 50% of Adam Berhad convertible debenture at par. If the debenture are converted into ordinary share, Aisyah Berhad will increase its interest in Adam Berhad by 25%. None of the debenture have been converted into ordinary share by 31 December 2017. For the last question is, I will explain about the Aisyah Berhad and Adam Berhad relationship. With reference MFRS 10 consolidate financial statement. By referring the MFRS 10 consolidate financial statement, the relationship between Aisyah Berhad and Adam Berhad is Aisyah Berhad as a holding entity and Adam Berhad as subsidiary. This is because Aisyah have power over Adam Berhad by virtue of the share in its holdings and potential voting rights, which are substantive. Aisyah acquired 40% of the Adam Berhad ordinary shares and also acquired 50% of Adam Berhad convertible debenture. If the debenture are converted into the ordinary share, Aisyah Berhad will increase its interest in Adam Berhad by 25%. The parent controls the investee if it has first power over the investee, second rights to variable return from its involvement with the investee, and third ability to use its power over the investee to affect the amount of the investor return.